Okay, well, 15 points on the Nifty, 11,177 is where things are at. The breadth, by the way, continues to widen in favor of advances, 900 higher as compared to 764, which are lower at this point in time. I mean, look at Muthoot Finance go. Muthoot is now at 1291. It's up 5%. So that's a big one. And it's done very well over the last couple of days, actually. It's broken out of a range. It was ranged for a while, but it's now starting to break out. Axis, of course, has been doing well, and then I can list out a bunch more. Hindustan Zinc, which is up 10% now. PVR is up about 4%, 4.25%. So back above, almost back at about 1100 rupees. India Mart is up about 4%. NTPC had one of the poorer performing stocks is up about 4% or so, 3.6, 3.7% as we stand. Let's get some fundamental opinion on things. Jigar Mistry is with us to run us through what he's making of the market. Jigar, thanks very much. Good to have you here. More to go, Jigar. I mean, how are you looking at the market? And I mean, you know, the index is 4-5 stocks from the lows of March, basically. So basically, 5 stocks contribute about almost 60% of the gains. But the market is not just 50 stocks, it's the broader universe. How are you looking at prospects from here on?
Yeah, good morning, Prashant. If you actually boil it down to it, you know, it's essentially a buy everything rally, right? So bullion, metals, equities, bonds, almost everything is rallying. And essentially it is that a 4 trillion GDP loss is sort of countered with a stimulus in excess of $10 trillion. So what's happening in our assessment is that the rotation is on its way. So it all started, you know, in COVID with pharma, then FMCG, then rural, then IT. Now metals are picking up. One thing that hasn't done as well is, frankly, the banking sector. Now, you know, from the second week of February, Nifty is down about 8%, that the banking index is down about 27%. And from what we discussed with the banking sector companies and experts, essentially is that they're differentiating the 30 DPD from an exogenous shock like the one that we have seen, vis-a-vis something where, you know, the economy is good and then that particular account is not doing great. And also both of them will get classified as to NPA based on standard rules, but the loss given default for both of them will be very different. So I think banking sector is you know, something that one needs to keep an eye out on, because you know, that hasn't really done as well. Either, you know, the economy is not going to feel that much of a brunt, and therefore markets are down just 8% from pre-COVID highs, or that, you know, if the impact is going to happen, the banking sector needs to catch up. So that's something that we are looking forward to. You know, we have historically discussed ICICI, HDFC, Axis Bank. Those continue to remain our favorite stocks.
Okay, Jigar, I mean, people have been really going out trying to pick stocks, and we just got this news about the promotion, you know, linked investment scheme for the API sector for pharmaceuticals. Now, pharma has a large basket. That basket buying perhaps is over and done. But now, if one goes beyond the headlines and you start looking at individual companies, which ones will you back?
So, yeah, good morning, Surbi. So, essentially, you know, this is a pack that I've discussed in the past we don't quite get, because if you compare the API pricing in India and the supply chain, so it's not just API, right? You have to still buy KSMs. And therefore, the whole supply chain, unless you build and bring the ecosystem back to India, you're not going to see sustainable gains in this space. You know, you remember the time when India tried to set up a fab factory, the semiconductors factories. And because the ecosystem wasn't really developed, it's something that hasn't really picked up for the semiconductors. Now, I don't know what will happen with with the APIs, but the China plus one theme essentially is something that looks to, you know, be the theme of the day, or rather the current time. And the production-linked incentive scheme is therefore one more sector which is about to get announced or has been in the talks, is essentially the mobile manufacturing. So one company that we have added over the course of the last month since we spoke is a company called Dixon Technologies. They are, you know, the manufacturers for OEMs, for washing machines, TVs. So, that ecosystem, India already manufactures mobiles. Foxconn is in India, Samsung is doing work in India, Dixon is itself has a capacity of almost 40 million mobile phones. So if you want to play the China plus one theme, we are much, comfortable playing it with Dixon Technologies rather than getting, and figuring out how the essential supply chain will evolve with API manufacturing.
Okay, Jigar, I would be doing a disservice to our viewers if I don't straight up ask you to outline three stock ideas, Jigar. Bottom up, what do you like?
Sure. So, Prashant, I think the banking sector is something that we discussed. So, ICICI Bank is something that we continue to own in the portfolio. It is, in fact, our largest holding. Dixon is another one that we discussed. Beyond that, I think in the technology space, things are, turning out to be interesting. So, after these stellar numbers from Infosys and TCS, or not so much TCS, but Infosys, I think the mid-cap IT space is something that the markets have not really paid that much attention to. The two companies that we own in that space is Cyient and Hexaware. Essentially, the difference in valuation between the top end and these companies is so wide that if the market is not paying enough attention, I think a lot of managements and PE firms would like to buy out the whole businesses, because it's available. In Cyient's case, it's available close to 10 times, right? And the quality business at that, 14,000 people. So those sort of businesses are something that, we continue to like and own. Beyond that, since the first time I came on the show a few years back, there is one company that we have always discussed, which is Max Finance. We continue to own it all this while, and essentially yesterday on the Access call, Mr. Chaudhary also mentioned that all the queries that they have received so far is only routine. That business is on, that transaction is on its way, and in due course it will get settled. So that is something that we continue to own as well.
Two other names which we've discussed in the past. One is Bandhan Bank, Jigar. It had a phenomenal run all the way, I think, up to about 400, and then it's cooled off a little bit. Do you still like it? And GICRE?
Yes. So Bandhan Bank, Prashant, is something that we no longer own now. But with the microfinance loans, at 200 when we started discussing this, it was a clear case where the markets were either for a company that has a 8% PPOP, and the market is discounting a 5% sort of an asset write back for a crisis that has been the worst in at least a decade, if not more. We're talking that for 1 year being written off, and that to us seemed like completely unacceptable. So after it's run up, I think it's not something that we currently own. GICRE is something that we continue to own. I think that business will still see a lot of upside, essentially because they continue to retain the market share. And if you see, the life insurance and non-life companies' price increases that they seem to have taken, most of these companies suggest that they are passing off the price hikes taken by the reinsurance players, and GICRE is a 60% market share in that part. So, there have been many questions like 150% solvency margin is not there, and what they only need to do in order to take care of that is sell some investments, book part of the mark-to-market gains into the reserve accounts. So all that will be taken care of. I think 30,000 crores is something of the mark-to-market gains that they are sitting at. Their combined number came to something like 104% if memory serves. So that is, again, a very interesting business to us. We continue to own it since the time we first discussed it.
All right, Jigar, thanks very much for that. Good talking to you as always. Thank you for bringing us the ideas as well. We do have to take another very, very quick break. We will come back on the other side and we'll tell you